Hello buddy, Sanir, engineer, MBA, and investor. And in today's video, I want to talk about the companies that I am looking at when we're talking about CRISPR companies, when we're talking about genomics companies, and even some tech companies here that I'm looking at really carefully, especially during these dark times in the markets. Of course, we've been in this market crash for a couple months. In the biotech market, we have been in this state basically in the early part of 2021, so well over a year ago, almost a year and a half ago at this point. But for the broader market, for tech stocks, for the non-genomics companies, we've been looking at this market crash for the last like 6 to 8 months, I would say. Probably more close to 6 to 7 months, which is really a long time when you think about it. I mean, that means if you sort of invested in November, December, or any time frame around those months, you'd be significantly down since then. You'd probably be down 40, 50, 60, and even 70 to 80% in some cases, of course, if you invested in high-tech companies. But of course, here in what I want to talk about is a little bit more related to genomics, but I do have some couple of picks outside of genomics. So my first company is Teladoc. Now, before you guys stop me right there and say this is not a genomics company, look, I've always treated Teladoc as a genomics company because one, they're the top holding in the ARK-G fund, which is, of course, the genomics fund of ARK Invest. And two, I truly believe that they're doing something novel. They're doing something noble that is, of course, disrupting the legacy healthcare. And I think that alone is a disruptor, and that alone is a enabler for other companies in the genomic space to sort of flourish, right? If you can disrupt this legacy healthcare system, then there are chances are that you can also disrupt the big pharma companies, the big legacy treatment that have no significant cures, or at least repress the disease or minimize the symptoms or the consequences rather than curing the disease, right? And I'm going on a tangent here, but hear me out, right? Teladoc, in my opinion, is a genomics company. The same way as I actually treat Palantir as a genomics company because they're sort of involved in the genomic side of things. Now, obviously, is it one of those CRISPR companies? Obviously not. Teladoc is not one of the CRISPR companies. They're not one of those atoms to atoms types of companies. They're basically leveraging a smartphone app to basically connect from patient to doctors or to professionals to basically get their care, reduce the cost, right? And this is, of course, one company that I'm looking at really, really carefully because of obvious reasons. I mean, look at this, guys. Last year, just look at this. In mid-June of last year, this company is down over 81%, right? That's just crazy, right? I mean, think about it. If you had invested, if you were one of those unlucky folks that invested in this company back in June 2021, then unfortunately you'll be down 81%. Now, obviously, this is not just reflected to this story. There are other stories across all the stock portfolio that sort of resonate with this type of behavior. But clearly here, we've seen a lot of price action, negative price action. But I think there's an opportunity, right? There is an opportunity. We talked about it from the last earnings report. Besides the weird loss that they had to declare because of unfortunately paying too much for Livongo back in 2020, I mean, this company is growing at over 25% year over year. Revenues is their guidance. Yes, they sort of shorted their guidance slightly, but they could be sandbagging it. Who knows, right? And of course, when you ask me, I think the newer generation would always prefer a smartphone app over going to physically see a doctor, of course, unless it's necessary, right? The keyword is necessary. And we already took a look at some stats that 80% of those visits are not necessary, right? So just take that for what it's worth. But Teladoc is definitely a company I'm looking at, worth about $5 billion market cap. I think it's just crazy it's worth $5 billion market. I still can't believe it. Second company, of course, this is now I'm hitting into the CRISPR space, and that is Caribou Biosciences. Caribou, I think, is one of those companies that shocked the world with CBO10 last week, a couple of days ago when they released their first time ever for data of CBO10, and lots of people in this space was surprised. Lots of people were shocked. I myself sort of expected that because I looked at their preclinical data when they went IPO shortly after. I was looking at it, I was like, wow, this is going to translate to something amazing, right? Now, whether or not I expected that type of data is irrelevant. I just knew that they were going to publish some sort of good data, right? But obviously, the data they released was amazing, right? They can't be better than that, right? You have 100% overall response rate, 80% complete response rate, and then that remaining 20%, or basically that remaining patient that did not get the complete response, they actually still got partial response, right? So it was just amazing data. Loved it. Again, small sample size, way too early, but you got to work with what you have. And to me, this company is well above worth $550 million, right? I truly believe this company is worth at least $1 billion, at least 1.5, at least their IPO price, right? Which again, they IPO'd around $15 to $16 a share. They peaked around 30 until they dropped to what you're seeing here on the screen. And obviously, price being up since a few days ago, let's take a look, up for almost 50%. Just amazing, right? If you, in hindsight, it would have been an amazing investment if you had invested shortly before publishing the results. CRISPR Therapeutics, of course, the other CRISPR companies I'm really looking into. I'm one of those big bullish people on CRISPR Therapeutics. I haven't really covered this company in recent weeks, but you guys know my thoughts on this company. I mean, right now it's worth about $4 billion, but I truly believe it could be worth a lot more. This company's been trading well below what it peaked earlier in 2021. Look at this, guys. If you had traded this company back in early part 2021, you'd be down 75% at most. So it's quite crazy. But again, that's hindsight is 2020, right? So you got to take things in perspective. I think the road is still going to be bumpy for these companies, right? Don't expect these companies to be trading like 20, 30% more in a week, right? I think a lot of people in this space have this. I coined this generation like get rich quick, right? And everything, and it's not, it's not really the people's fault, right? When you take a look at what happened in the last 10 years, you saw all these tech companies like Apple, Google, Facebook, Microsoft, Amazon, Netflix growing all the way up multiples in the cross of like 10 years. I mean, you're coming off the 2008 crash and things been up and up, including houses prices. You saw the phenomena with Bitcoin. And then you saw all these cryptos, people making like thousands of dollars of money in a single day. And I think you have this get quick rich feature enabled in this current generations. And then of course you have apps like Robinhood, or for Canadians, Wealthsimple, and across all the globe here you have different apps where you can just buy and sell stocks at a low cost, if not free, in the case of Robinhood. So I truly believe this is a generation that's expecting quick results, but I really am saying this to the bottom of my heart that this is going to be a long road, guys. This market crash, don't expect this to be ending anytime soon. Not trying to be pessimistic, not trying to be, the one that called it, or I'm not trying to be right here. What I'm trying to say is that you should adjust your expectation, or at least understand that there are bigger macro issues. Fed rates are not going away. Inflation is not going away. The invasion with Russia is not going to be going away. Even if it does go away, the impact has been devastating, right? I'm not even talking about what's happening in Ukraine and Russia, between those two countries, but just look at what's happened in Germany with energy, right? Look at what happened with food prices across several countries like Pakistan or India, because they're dependent on several regions, or specifically with Russia. And this is a lot of unintended consequences that are going to go a lot more. And then we have the whole pandemic, right? Who knows what happened with the pandemic? Who knows what supply chain issues we have, and what's that is going to look like in 6-8 months, in a year or a year and a half, right? This is going to take a long time, right? So definitely one of the companies I'm looking at. So now I'm going to sort of move away from the CRISPR/genomics companies. And of course, shout out to NTLA, shout out to Beam Therapeutics. They're amazing companies. Invitae, DNA. We're looking at BNGO. We're looking at several companies that, of course, are doing really, really interesting things. But for the purpose of this video, I wanted to keep it short. So I'm going to move to Airbnb here really quickly. I think Airbnb is one of those companies that are going to shock the world. I think of course, they're riding in an industry that is very volatile. I mean, the hotel and travel industry has been really, really hard, especially during the pandemic. But as we move back to this quote-unquote normal life, people are working from home, people are working from remote locations. I think Airbnb has an angle. They just published the latest release with their webpage that I truly love. I mean, they're led by Brian Chesky, who's the founder and CEO of this company. Truly believe there's some potential here. It's worth about $7 billion market cap. I think this could easily go well above its value. I mean, it did peak at about, let's say, $200 a share, and it's down about 45%. So there's an interesting opportunity. And then, of course, all of this has been happening during the pandemic, during the tail end of the pandemic. So try to look at the big picture, try to look at the long end, and always ask yourself when you invest in these companies, do I see a world without this company in 3, 5, 7, 8 years, right? Do you see a world without Airbnb? My answer is no, I don't see it. Now, do I think they're going to multiply by multiple X? That's not necessarily the question, right? The question is, do you think the brand will be here? And if you think the brand will be here, then based on your other sort of research like financials, balance sheet, income statement, looking at the brand strength, looking at the community, looking at how this company's trajectory itself, its guidance, its outlook, and so on, you make a decision to invest or not, right? So that is definitely one of the companies I'm looking at. I'm a huge fan of Airbnb. I am not going back to hotels. I tell you guys, and I tell you again, I'm only going with hotels with work related, but when it comes to outside the work, I just love the Airbnb model. I just had myself the experience Airbnb just today here in Lisbon, and I truly believe this is an amazing opportunity for hosts and for people, citizens to connect with each other. It's just a huge enabler, right? You talk about GDP creation. This is one of those, right? That's just my opinion, and I've already covered this company in the past, so this shouldn't be anything new. Moving on to Netflix, I won't cover too much here because I think a lot of you have heard it well above my range of expertise here from other news outlets, including legacy media. But clearly here, Netflix here has been shot down. I mean, it peaked almost 700 just end of last year, right? And it dropped about 75 to 80%, right? So there's an opportunity here. Look, again, ask yourself this question, right? Do you see a world without Netflix, right? I personally don't see it, right? I don't see it in the next 4 to 8 years, right? And based on that statement, and I'm looking at the financials, everything seems to be good. Now, obviously, there's the whole subscription growth and the sort of road to the wave of the pandemic, the post-pandemic world, but and of course, the increasing competition. But then you look at the brand power, right? You ask people on the streets, right? Are you willing to cancel Netflix? And as much as you see people on Reddit and on Twitter saying they're canceling Netflix because of price guidance, you guys got to trust me on this one. If there's one streaming option you had to keep, I bet you that over 80% of the respondents would say Netflix will be the one they would keep, right? But again, who am I to know what the stock price will be in a few months? Again, look at the long-term picture, but Netflix is definitely one of the companies I'm looking at. And then finally, Tesla. I mean, what do I need to say about Tesla? I think Tesla is one of those companies that are here, that is here to stay, right? This company obviously, sort of revolutionized the whole legacy autos world. I mean, it sort of brought oil dirty cars and brought this beautiful EVs, beautiful electrical vehicles, battery electrical vehicles to the world, influenced other companies to jump on the same bandwagon. And now you see all these legacy autos moving slowly, very slowly, but surely to electrical vehicles, specifically battery electrical vehicles. And that's just the electrical side of things, but obviously Tesla's a lot more than that. You have your autopilot, robotaxi potential. You have their HVAC/energy business potential. You have insurance business potential. You have the solar energy business potential. So lots of good things. And in my opinion, as long as Elon is in the helm, I don't know what's the expression there, but if he's leading this company, I have no concern about the company. Now, whether or not the stock price is lucrative, look, the stock price got shot really hard since earlier this year. I mean, you're looking at this. Look at it sort of peaked around 1,200 late 2021, early 2022, and it's been down 48 to 45%, something along those lines. So it's a really nice opportunity. In my opinion, Tesla is more of a safer play than anything. But again, a lot of people consider this company to be a very volatile stock, very risky stock. Again, do your own research. We don't provide financial advice. But I think Tesla is definitely one of those companies that you should be for sure looking at when it comes to looking at the opportunities, right? This is the point of this video, right? What are the companies I'm looking at, I'm sort of serving, right? As much as it's good for you guys, I know a lot of my viewers from the genomic side of things, the CRISPR side of the world, but try to look at outside, right? Try to learn a little bit what's going on in the tech world, software companies, maybe in the manufacturing side of things, the retail side of things. I didn't even talk about the other companies that I'm also looking at, but not really actively, like, of course, the big tech companies like Amazon, Apple, Microsoft, Google. You can't go wrong with these companies. And some of them are down 30 to 40%. So there's an opportunity there. But again, you do your own research, you build conviction. I'll end this video like this. Thank you so much for watching, guys. Hopefully you guys enjoyed it. Do subscribe, do like this video, and I'll see you guys in the next video. And thank you so much for watching, and once more, thank you.